This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I am your host, Scott Meyers, and this week's guest is Dean Rogers. Dean began his professional career in the NFL with the San Diego Chargers, but soon realized that if he kept playing, his health would be at stake like so many others he witnessed around him. After walking away from the NFL, he began investing in real estate in 2013, where he has built a highly successful portfolio in California. Since then, Dean has flipped and wholesaled hundreds of houses and has a rental portfolio worth over 8 figures. But what he is really passionate about is helping others learn how to build wealth and freedom with real estate. And on today's episode, we talk about how the winners will be the ones who recognize that it takes hard work to build a business, and that now is the time to revamp your processes and make sure your back office is ready for the tsunami of opportunity heading our way. So without further ado, please enjoy my conversation with Dean Rogers. Dean Rogers, so good to see you. Welcome to the show.
Thanks for having me, Scott. Excited to be here.
Well, Dean, I have given Storage Nation a little bit of your background, talked a little bit about your bio, but if you would, why don't you fill in the gaps and get us up to speed on not only how you got started in real estate, but how you're approaching this crazy economy that we're finding ourselves in right now?
Yeah, I love that question. So, Scott, I'm the football guy. I got started in basically my professional working career as a player in the NFL. Grew up always dreaming and wanting and aspiring to make it, be a professional athlete. I realized in high school that I wasn't tall enough or big enough for basketball. So I went the football route and kind of went all in on that. And at least in my own head, I kind of had the underdog story all throughout. I grew up in a small farm town in Central California and, wasn't in a big city having a lot of scouts seeing me, and was under recruited in high school and ended up being fortunate to go play at the next level at UC Davis, where I played football. But I kind of had a chip on my shoulder. I felt like I should have been recruited and playing for a Pac-10 school, right? I grew up watching UCLA and USC and Oregon and all those schools, and was kind of bummed out about that, but went on to the college scene and had a great career there, first team All-American, and was recruited by, being looked at by a lot of different scouts. And then I had the good fortune to get the call from the San Diego Chargers, and there I was. Next morning, was on a plane and was on the field, meeting players, going through the physical, and getting suited up for next day's practice. Like, it was right into it. And I got to tell you, Scott, it was an insane experience going through all of that. I've got infinite amount of stories, but if you could imagine, like, growing up as a little kid, dreaming of playing as a professional athlete. And, while I was training for the NFL, I'd be training 3 to 4 hours a day, doing sprints, running routes, catching the ball, doing weightlifting. And then the other 3-4 hours I'd be playing video games with my friends. And I'm playing video games with these guys who have looked at as heroes. And now I'm sitting 3 lockers away from Phillip Rivers and Antonio Gates and just legends, Hall of Famers who are now, hey, what's up, Dino? How's it going? Phillip Rivers, just country boy. And now we're peers, we're teammates. So that whole experience was just a wild ride. It was so much fun. Everything I had hoped and dreamt of accomplishing was right there in my hands. And kind of my story to kind of wrap that up, beyond all the crazy cool parts about it, just if you've seen HBO's Hard Knocks, you've probably seen all the super intensity, high alpha energy, cutthroat side of the business. And that's the reality of that. There's a team of 50, some odd people on the team, and there's 32 teams. There's only so many people on the earth that can play the sport. And it's a 1 in a gazillion chance to be able to be on that field and suit up on the team. So to be there is incredible. But once you're there, like, it's intense and it's high pressure, high intensity, while at the same time, it's also just this surreal world of you're sitting next to people who are making, $100 million in their contract, and you're going to red carpet events, and you're seeing the most beautiful women you've ever seen in the world just showing up out of thin air at hotels. And like, there's that crazy Hollywood side of it too. So that was a big, just experiential shift for me, not having grown up in that environment. And so it was pretty crazy. But Scott, for me, my story is I played tight end in college, played running back in high school. And when I got to the Chargers, Norv Turner moved me to fullback. So wasn't playing tight anymore. I was playing fullback, and I was playing great. I was feeling great. And I'll never forget, like, the very first day I show up, there's no warm-ups, there's no training. It's like, hey, you show up, you get your pads, and you're practicing the next day. I'll never forget the very first play. I was nervous. Like, am I good enough to play here? All these thoughts are going through my head. And we run a counter play, and I come running around the edge, and Hall of Famer Bob Sanders, strong safety, he's flying off the edge, and I light him up. And Norv Turner throws his clipboard. He's like, "There you go, Rodgers." Like, I just had the hugest rush of adrenaline pumping through me. And it was kind of like 100% from that point forward. It was just go, go, go. And just remember playing great and feeling great. But there was one thing that I'd never experienced before in my career. Going from tight end, like if I go out to run and catch passes, but I also block, right, when it's a run play. So the guys that I'm blocking are usually the big, giant defensive ends, and they're 1 to 2 yards away from me. But at fullback, I'm blocking the big, giant defensive ends and the big, giant linebackers who are as big as me. And we're running full speed at each other. And instead of being 1 to 2 yards away from each other, we're now 10, 15 yards away from each other. Those collisions are massive. They're car crashes. And I remember going back after practice and having to ice my head because I felt like my head just went through just punishment after punishment. And that was eye-opening for me. It scared the living crap out of me. And what kind of reinforced me being scared about that was ESPN was now talking about concussions. Junior Seau killed himself that year and basically said, study my brain, because he just went through a 15-year career of doing that same thing, running into fullbacks, which is the position I was playing. So it opened up my eyes, and just I realized that even though I was playing great, feeling great, and Norv Turner actually telling me many times I'm going to have a long career, I knew that if I had a long career, I'd probably have a short life, and how good was all that money going to do for me if I was, hardly able to function and just wasn't myself. So I made the hardest decision to walk away from the game that I loved and the dream that I had, gotten to. And it was hard. It was really, really hard, but I knew it was the right decision. And I didn't really look back and dwell on it. I didn't get depressed and go, sit at home and think about it for months. I was fortunate to have a good friend I played college football with reach out to me and said, "Hey, Dean, I know you're done playing football. I got an opportunity for you. And it's a software company out of the Bay Area, San Francisco. And I could pretty much walk you in the door." And so I said, "Hey, I knew there was going to be life after football. It seems like really the perfect fit, something I'd be interested in and I'd be able to do well at, even though I had no applicable skills other than playing football at that point." So I knew, all right, entry-level spot, I'll come in, I'll work my butt off, I'll show them what I got, and surely I'll get the big paydays. So I walked away from, 7-figure contract and started working at a $65,000 salary in the San Francisco Bay Area, pretty big shift, and got started. Now, for me, I was excited knowing this is incredibly easy physically and mentally compared to what I came from. I mean, high pressure, you're on all day, 24/7, putting your body through the most intensive, exercise, and you got to be mentally ready to perform and be ready to execute the plays correctly. So just sitting at a desk was probably the easiest thing I'd ever done in my life, slapping the keyboard around. But after a year of working my tail off, they told me that I got a pay increase from $65,000 to $67,000. And I about fell out of my chair and just knew this was not going to be the path for me to get back to that dream that I had as a kid, being able to provide for my family, to have the freedom to live on my terms, to go to my kids' practices and games whenever I wanted, and to do what I wanted to do on a daily basis. So I did what probably a lot of us did to get into real estate. Was I reflected on what are some things that I like, things that are interesting to me. And thankfully, I didn't dabble in a bunch of things. Real estate was the first thing that came to my mind, because I just remember the late night infomercials from Dean Graciosi and, HGTV shows, and watching Love It or List It with my parents at home, so, all right, I like real estate. Let's look into real estate. So I typed in how to get started in real estate in Google, and up came Sean Terry's Flip to Freedom podcast, which was a free podcast I could tune into. And he was talking about real estate wholesaling, single family houses. And I just remember hearing his enthusiasm, his passion, and talking about these other Joe Schmo everyday people who were getting into the business and transforming their lives and creating the freedoms that I once had in my hands, like in my fingertips, of what could become of this dream, career in the NFL, to now I got to start all over from scratch. So this seemed like the right vehicle for me. So I didn't hesitate, Scott. I dove both feet in, became obsessed about taking action with exactly what Sean was teaching. And within 3 months, I did my first deal and sold that first house, which was a wholesale deal, and proved to myself this was real. I could do it. And from there, obviously the story continues of having success. And like most other people who are reaching for success, I had failures along the way, big mistakes that set me back and had to dig myself out of. So the journey has definitely continued and evolved into where I'm at today, which I'm very proud to say that definitely have accomplished a lot, right? It definitely took time and effort and discipline and sacrifice. But to where I'm sitting at now, our main business is focused on single family houses for wholesaling, for fix and flip, and building a rental portfolio. So, we have a multiple 7-figure business around the fix and flips and wholesaling. And we have, 8-figure portfolio for real estate rentals and passive income. So that's where we're at today, Scott. And it's definitely been exciting. And there's still so much more to do and so many more exciting opportunities that we're going to be going after.
Well, a lot to unpack there, clearly, Dean. And, it's interesting. There's some folks, and I could look at this a couple of ways. First of all, commending you for recognizing and realizing that you don't have to put your body and your mind through what the meat grinder that the NFL is to achieve your dream, because so many folks they want to get to that place where money is part of it, but certainly when you're a professional athlete, that is not the primary driver behind it. But that is some of the the trappings, if you will, and the winnings is that it is lucrative. However, if you're not around, and I don't, you probably know the statistic better than I do, but it seems like not too long ago I saw where the average age for an NFL player is somewhere in the mid 50s to late 50s, their average lifespan. And I don't know if that's true or not, but either way, even if it's in the 60s, that is not, to do that. And at the same time, that is the dream. If, you want to do that growing up, I mean, that's why people stay in it. And so for you to walk away from that was not only incredibly wise, but also, probably heartbreaking. I mean, you want to talk about a gut-wrenching decision to be able to do that. That had to have been just extremely difficult, and bittersweet probably doesn't even cover it.
Yeah, you hit the nail on the head. I mean, I still wake up to this day having dreams of suiting up for a game and like getting ready to go out on the field. And, I just wake up with my heart pumping because my mind was just there, right? I'm back in it. And I wake up and I sigh and I'm like, oh, man, I miss it, right? I wish I was still there just because of everything that comes with it. It's a childhood dream. And again, everything that comes with it is just icing on the cake. So to walk away from it was hard. Do I have regrets? There might be like the smallest bit of regret because it was something I was so passionate about. And it's what most kids dream about is, playing out at recess on the field of being a pro athlete and watching their heroes on TV. But I know without a doubt that it was the best decision for me to just walk away and move on to the next thing. And for me, arguably, I'm going to live a better life, more fulfilling life, and actually have more wealth as a result of ending sooner than later. Because I talk with some buddies still to this day, and they say, I wish I would have ended sooner and started my next career, because that's really where I'm going to end up anyways and where I needed to get started. And now I'm kind of behind.
True statement. Well, we talk an awful lot around here. And when I say around here, meaning with my staff and my organization, but more importantly, my family and with my kids, about self-awareness. And, finding out who you are and being comfortable and content with that and recognizing it, but then executing upon your life plan after that. And so for you, clearly, if that was the right decision for you, that was the best decision, executing on it, whereas so many folks probably wouldn't. And there are some folks that are pro athletes that are kind of stuck in a grind because that's what they've done forever. And they'd be letting people down, letting themselves down if they ended up quitting, but only to realize what you did and then executing upon it, which is, you're only going to be a pro athlete so long, and then you have to start your career. So why not do it now and have my health? And that's a very wise decision to make. But here's one of the other, what this does, the discipline that sports plays in somebody's life. Not only do you have some incredible mentors along the way that are named coaches that can speak into kids' lives and all through your formative years, which is just invaluable. But, the 2-a-day practices and the work ethic that goes into striving towards something and continuing to push and push and push, that feeds over into the business world, that feeds over into your work life, post, any sports. And that is another thing that we speak to a lot around here as well. And that is, and I don't know if you agree or not, but I don't want to be that old guy that is complaining about the generations coming up behind us, but it's difficult these days. It doesn't seem like the work ethic is there, and that there's not as many people that are really chasing the dream. They want it. A whole bunch of people want it, and they want success, but there doesn't seem to be as many people that have the work ethic and really, doing the grind day in and day out to achieve success. And clearly that is what has led to not only your success in the software firm, even though it didn't pay out financially, but then to get into the real estate side. And I imagine is the driver behind you building the business that you have right now. Am I off base on that? Speak a little bit to what you're seeing out there and how the work ethic, feeds into your business and those that are around you, perhaps your staff and your team.
Yeah, I love this topic because I feel like it's the key ingredient for every success story is one's ability to have grit. If you don't have grit, then you're probably not going to make it. And what grit is where your passion meets your willingness to put that effort in when times are tough, because times will be tough, right? And it also is just you being disciplined enough to be consistent. So that grittiness is what I've found all investors have. And you can just see it. You can see it on someone's face, right? And you might catch that person at the time where they're going through something rough, but you can just see they got the fight in them, their willingness to just push through no matter what. And you also see that other investor who's gone through it and has had the ups and downs, but they realize what it took to get there. And so for me, I think the majority of the up and coming generation is there's just so much media out there with social media and the media that just portrays, kind of a blissful lifestyle and an easy lifestyle, and that anybody can attain it. And if you get trapped looking at social media, you'll start to kind of feel bad about yourself because you see all these people on vacations nonstop and living their best life, and they've got the money flowing and they've got the fancy this and that. But the reality is that there's far and few people that just get lucky and have those things come to them. Most people had to work extremely hard and for a certain duration, usually long period of time, to attain that. And maybe someone else is benefiting from that, that's online flashing the fancy things. But I almost would rather flash the lack of things because of the fact that I have such an appreciation for what it takes to move the needle forward and how much effort it takes to earn and make money. Right. And so I want to preserve that thing that I've spent so much time and effort working for.
Yeah, Dean Rogers, that guy, he's that overnight success that has been 25 years in the making that nobody sees, and that luck that other folks like to lean on, as you mentioned, is luck is where opportunity meets preparation, and also putting in the heavy lifting and doing the reps over the years. And so, yeah, that's the part that's not that's not sexy, and so that isn't what is sold on in the media and in social media as well. And I'm probably going to misquote it, but I think Edison said, I think luck is people don't want success because success looks like hard work and wears overalls or something to that effect. And that is the place where we're at right now, which means that this is an opportunistic time that we're heading into. And I, for one, am thankful for this recession. And I know that may sound glib, and some folks may be scoffing at that a little bit, but in our industry, in the self-storage industry, we benefit when times are tough and the economy changes. We're in the trauma and transition business. When businesses downsize and individuals downsize, and when there's some calamity, self-storage benefits. And so we're not celebrating that. That's just what happens in a pandemic, and that's just what happens in a recession. But one of the things that I'm looking forward to is that we can kind of get back almost to an investing normal. Because some of the folks that did get into real estate in all forms, they got in after 2010 when life was good, interest rates were low, and the money was flowing from the banks, and values continued to go up, and demand was high for all asset classes in real estate. And now we're going to see some of those folks that when the time gets tough, and now our interest rates are 3 points higher than they used to be. Some of those business models that folks had aren't working these days, and we're going to have a little bit of a normalization. And that being said, some folks are pivoting. We're just doubling down in our industry because storage is on fire, and it does, again, very well during a recession. But Dean, you and I were talking just a little bit before we got on here about some of the pivots that you and your business partners are making as well. I mean, still going headstrong in what has got you to this place, but you've also been kind of gearing up and looking at some other asset classes and some other businesses. You want to share with Storage Nation a little bit about what you're doing and your reason for those approaches? Yeah.
So I think the biggest thing for us with a market shifting, the sentiment of buyers and sellers in the market is we need to get even better at what we do, right? When you said money's flowing, deals are easy, past couple of years especially have been that way. And so for us, one of the things that we did is we just went through a major overhaul of our systems and processes and training for our acquisition guys so that we're more prepared and in our best prepared in the best way that we can. So when we're negotiating deals, we're getting the best deals. So that's our focus, is we're being more conservative on our analysis of the deal, and we're negotiating better. Interestingly enough, in the past handful of months, with the market sentiment shifting and seeing some of the prices on the market shifting downwards, we're actually doing better deals. We're actually making more money on our deals. And that's by no mistake. It is the intentional upfront process of how we're underwriting these deals and how we're negotiating and making our offers. So one of the things that we've been doing in this current year now is we've been gearing up. We've been, stockpiling more money, buying less things that are requiring a lot of our out-of-pocket dollars. Okay. because as we both know, you can buy the same deal two different ways based on how it's structured. And so one of those deals might require a lot of out-of-pocket money for a down payment or money that's trapped in the deal based on what you were able to refinance at. And you might buy the same deal, but because of the numbers, you're able to refinance and have no money in the deal, right? So we're focused on having minimal amount of dollars in a deal and keeping our own cash in the bank so that we're prepared, right? We want to have 7 figures available to go in on these larger deals. So to your question, we're primarily in the single family space, while my business partner has, in the past couple of years, been playing also in the commercial space with another partner and getting into things like gas stations and building out warehouses and different things like that. And so one of the top of our list items is to get into self-storage. So we've been underwriting deals, getting more familiar and understanding what a deal looks like so that when one does come across the desk, that we're ready to take action. And we were this close to getting our first self-storage deal several months back, but we're on the hunt. We're looking for more. So if there's any listeners that have an opportunity and is interested, we'd certainly like to take a look at it. But that's really the next move for us, Scott, is to focus on passive income. We're not looking to get into something that's requiring lots of effort. And we see self-storage as that vehicle. You think of the craze over the past handful of years around multifamily and the amount of money going into it and people probably paying too much. Well, self-storage is almost that same vehicle, but in my mind, a little sexier because you're not having to worry about plugged toilets, evicting tenants, doing those kind of things. You're not dealing with that same type of experience. It's much more hands-off, and usually it's a set it, forget it type of tenant. And sure, you have some non-payment issues, but those seem to be much easier than a tenant who's living there and has some attitude about it.
100%. That's why we got into this business. And before it was called a lifestyle business, it was for us. Back when I got into self-storage 17 years ago, it wasn't sexy. It was the stepchild of the commercial real estate industry.
Right.
But what is sexy is cash flow without the hassles of tenants and toilets and trash. And so I don't care what anybody says anymore. Our housing portfolio and our multifamily portfolio may have been nice to talk about at cocktail parties, but it was miserable from the 9 to 5 when we had to manage all that mess. So you're right that for all those reasons, that's why we love this asset class. And a couple of the things that I wanted to touch on, and Dean, very smart. I mean, the folks that have been around for a little while, they're recognizing this time where I feel that there's going to be a little bit of a flux where the lenders are kind of taking a step back a little bit. They're not saying no, but they're not rushing to say yes. They're dialing back their LTVs, their loan to value, and as interest rates are going up, they just want to see what a project looks like before they enter a long-term relationship with lots of commas and zeros as your partner. And so we're cautiously moving forward and going as fast as the banks will allow us. But these are the times right now so that when we hit a new normal, whether it's the bottom or whatever it looks like, as long as we know what the rules are, game on. We're ready to play the game. And right now the rules are still being formed until we get to the bottom. We don't know where the Fed's going to go with rates. As they said, they're going to break the economy. They're going to raise rates until we get to the bottom. And once we get to that place, then we're excited about that. But in the meantime, you're doing the right things, and that's everybody should take a page out of what Dean just said, and that is it's time to sharpen the axe. Your processes, the people, your training, making sure that everything is in place, your back end is in order, so that when it's time to hit the gas, that everything is there and you're ready to go and to move forward. And we've been working on those same items. We've been running and gunning for so many years. There's a lot of pieces that are just neglected in our organization as well. And so now is the time to shore those up and then prepare for the next burst and the next sprint that we're going to have. Also, one of the other things that I don't know if you're seeing right now as well, but finally a return to seller financing. We're having those conversations again, and we saw that when rates went up 3/4 of a point back in the summer. all of a sudden, these deals that were in the middle of retrading, then we were going back to the seller and dusting off our script again to say, well, I know you turned down seller financing and we told you the benefits of that when we first began to talk, but now this deal isn't going to go through unless you're going to participate. So are you open to it now? And we're recognizing that that's, if folks want to sell and get the price that they want, then they obviously have to give up on terms. And those terms can be negotiated much easier with the seller than they can with a lender who has a small box in which the loans will fit. So are you seeing that? Are you experiencing that? Are you training the staff? Is that part of the sharpening the axe that you're getting prepared for?
It is. Yeah. It's something that we have in our tool belt. It's something that we haven't needed to spend time really getting good at and practicing too much, even though that is an exit strategy for a lot of people and they focus primarily on that. But I will say that is something that we've had to pay attention to and realize because of the fact that the cost of money on the back end is significantly higher. Now, from perspective standpoint, when I first started buying rentals in 2018, when the light bulb finally went off, if I want to create wealth and have passive income, I needed to start acquiring and holding and building wealth through having assets. The rates were at 6.5 at that time, right? Some at 7. And that's going through, secondary market refinance to get my money back out and have that as a long-term 30-year fixed loan on these rentals. It was good times 6 months ago. I was getting 3.5%, and it was easy money, right? And the terms looked so much better, but now they're back up to the 6.5 and 7s, and some lenders higher. So can a deal still be done? You just have to pencil it out. You got to put it and adjust and base your deal on that. If it doesn't pencil based on the new numbers in the current market, then it doesn't work. But that's where seller financing is so powerful because you can create the terms. You can pretty much write the story however you want. You can even have 0% interest, right? The seller, if they're getting their price, they might not even be thinking or caring about interest. So it's all about how you position it and how you structure it. And that's where you can create win-wins for everybody involved. Whereas the normal market to borrow money just isn't the best option. So you can get creative and make of it what you want.
Yeah, I got started in real estate not by watching Dean Graziosi, but by watching Carlton Sheets on a late night program. And so you're nodding, Dean, so at least you remember him. But yep. Many folks out there have probably not heard of him. This is back in 1993, and that's when interest rates were anywhere around 8 to 9%. And some folks are saying, oh my gosh, how can you even make money at that? Well, it's the same as you make money right now. Once again, we know how to underwrite, and we know what the rules are, meaning we know what our cost of capital is. And if it pencils, it pencils. And if it doesn't, it doesn't. And the market will always adjust. The seller's got to realize that, hey, I'd love to have this price, but here's the true reality of where interest rates are and where this property is going to trade when I be able to sell it for, because it's a function of the cost of capital for my buyer. And the lender's only going to give my buyer so much. And so this is all I can list it and sell it for. However, if a buyer like yourself comes along and they say, well, I can give you your price, but you got to give me some terms at 0%, well, then it works. So not only, can we go to the banks when the interest rates are higher where they are right now? Yeah, they're 4 to 5 points higher than where they were, less, at the beginning of the summer. But all we're doing is just adjusting our underwriting. So nothing has changed, folks. It's really not a reason to sit back, and wait for rates to come back down again, because the opportunities are still there. You just got to underwrite it to where the market is, and the market will adjust the price, the sales price that a seller can sell a facility for, a house for, or an apartment complex. Either way, it's just adjusting to where the market is. So, Dean, would you add anything to that before we head into our last question here?
No, I think it's just the key thing that every entrepreneur that's successful is going to have is their resourcefulness and their ability to adapt and change as the market changes. So times have been easy the past couple of years. Times aren't really that tough, at least not yet, but it's just a shift in the conversation and some of your strategies that are going to put you in a position to be successful.
I agree 100%. So as we head into and we navigate, we're not at the bottom yet in terms of where interest rates are going to go. And certainly we're heading into an election year where things are going to be a little tumultuous and people are going to be holding their breath again. Outside of what you've already shared, Dean, and looking at, shoring up the back end, getting your processes in place and the back office, what is your approach from a true investment standpoint? You talked about looking at some different alternative investments as well, but is there any one thing that is at the top of the whiteboard right now that you guys are digging into that you feel is an opportunity as we head into the balance of 22 and into 23?
Yeah. So I say the two things at the top of the list is continuing to do what we're good at and not trying to get fancier or too cute. So we're really good at finding deals in the single family space. So we're not trying to encumber ourselves and be involved in too many deals that take time. And so the wholesaling side of it is something that we're good at. And if it's an easy in and out type of deal from the standpoint of fixing and flipping, then we're going to do that as well. And then I think the greater opportunity that we're excited about is to get into self-storage business. And so we're prepared for it right now today from a capital standpoint. And it's just where the opportunity meets being prepared for it. And that's where we're looking to get lucky and have that next deal come across the desk, and what we're really excited about. Because being able to navigate and weather a storm really comes down to your cash flow. Do you have enough cash flow? And I see self-storage as being that vehicle that is not completely perfectly automated and has no blemishes or things that go wrong, but it lends itself to being something that people need and want, kind of set and forget. And as the numbers pencil as you underwrite it, it should continue to produce and operate at those numbers. So I see it being a vehicle for us that will really help us out.
Well, it is. And, I got your back, brother. So we'll be having some conversations and being able to share any and all resources that we have to make sure that we get you and your staff off on the right track. So
amazing.
Dean, it has been an absolute pleasure. You've got a podcast as well. What is the best way for people to be able to follow you and learn a little bit more about what you're doing and connect with you?
Yeah, so I absolutely love connecting with people. So if you guys go to deanrogers.com, you'll be able to see all my contact information. Like, Instagram is Dean Rogers Real Estate. Got a YouTube channel, just youtube.com/Dean Rogers. But if you go to deanrogers.com, you can find out all my contact information on there, as well as the podcast. And just please reach out. This is what makes the business so much fun, is connecting with other people. Because as we connect, like you and I are right now, it instantly opens up other doors to a new perspective, to new resources, to new relationships and opportunities. And that's where, when you realize that and actually put it into effect, that's where the business gets especially fun and gets more abundant. So just please reach out, and love to stay connected with you guys.
So true and so good. Appreciate you, Dean. Hey, before we wrap up here, what is one of the best pieces of advice that you were ever given by a mentor, a coach, anybody who's helped you along the way on your journey?
Yeah. So for me, I think we touched on it before, but everybody's going to have a different path. For me in football, there was always someone bigger, stronger, faster, more athletic. But for me, what allowed me to be successful was just continuing to be disciplined and focused and controlling what I could control. And so that was being prepared. It was putting in the work and effort. And that's what I could do. And just, if I always gave my best effort, then that's all I could hope for and could control. So I think if you can do that, you can get focused and focus on leveling up your skill sets and getting around other people, rather than just staying, narrow-minded and focused with your blinders on, that opportunities will come. And times are going to be tough. They're going to be hard. And they are for almost everybody that's been successful. So don't get distracted by social media. Just stay on your mission, and it will be so worth it. And you'll be proud of yourself for sticking to it.
Yep. Agree 100%. Dean, thanks so much. I appreciate you sharing your time today. It was great to connect, and I'm looking forward to podcast number 2 with the follow-up. Take care, my friend.
Absolutely. Take care.
Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.